If you own anything other than Bitcoin, you're not investing, you are simply gambling.
Majority of people do like to use crypto as a form of gambling. They'll throw whatever amount of money it is at whatever amount of coins. Have they done their research? Have they looked into the analytics, or do they have a professional guiding them? Probably not. That's why 99% of people lose.
If it's not your keys, then it's not your coins.
I think that's the thing with crypto. If you've been here long enough, there's no such thing as, a centralized exchange that is safe.
90% of people should never touch leverage.
If you log into Bybit and you deposit money, trust me, you will lose that money, because leverage trading is a very hard thing to do. You're competing against exchanges, you're competing against market makers, you're competing against whales, institutions, big players.
Regulation doesn't kill crypto, it pumps it.
I think you have to be a bit of a grown-up about it if you are on the cyberpunk side, and just admit that we do want to live in this free world where the government doesn't touch anything and the banks don't regulate this, but unfortunately that's just not the truth, and it's never going to be.
Welcome to Crypto Coach Will, where we bridge the gap for everyday investors wanting to build real wealth in crypto. I'm Will Wright, the founder of Mining Store and Imperial Wealth, two of Australia's leading companies in the crypto space. For over a decade, I've helped everyday investors safely and securely set up in the cryptocurrency market so they can build long-term sustainable wealth. In this podcast, we break down the complexities of the cryptocurrency market, everything from investing, trading, DeFi, and even Bitcoin mining. Let's get into it.
If you own anything other than Bitcoin, you're not investing, you're simply gambling. That statement has cost newbies in crypto millions, and today we're going to prove whether that is right or completely wrong. We're going to break down the 5 most controversial pieces of advice in crypto that people are following right now. And here's the thing, some of them will make you rich, and some of them will absolutely destroy your portfolio. Should you go all in on Bitcoin, or should you diversify into altcoins? Is leverage the smartest tool, or is it the fastest way to blow up your account? And does mining actually beat just buying Bitcoin directly? And the last one is going to be something that is on everyone's minds right now, and it's dividing the entire crypto community. We are not holding back. We're going to debate both sides of every argument, backed by real data, real results, and real money on the line. By the end of this episode, you'll know exactly which side that you should be on, because in this market, the wrong advice doesn't just cost you gains, it's going to cost you absolutely everything. Let's get straight into it. Even, welcome to the debating arena.
Hello, sir.
Let's get controversial.
Let's get controversial.
Get into I've got my fancy little iPad today don't even know how to turn it on, mate. Read it.
The tech man.
It's a good start there. Oh, I might want to cut that. The first point that we want to discuss here is, if you own anything other than Bitcoin, you're not investing, you are simply gambling. What's your initial thoughts on that statement?
I think as a statement as a general sweeping statement, applying it to a lot of retail, I think it's mostly true, which probably most people wouldn't expect me to say. And that's because majority of people do like to use crypto as a form of gambling. Mm-hmm. They'll throw whatever amount of money it is at whatever amount of coins. Have they done their research? Have they looked into the analytics, or do they have a professional guiding them? Probably not. And I guess the easiest way to apply it is something personal to me, which I've done in the past, is, growing up in Australia, all of us love our sports bet accounts or having a bit of a punt here and there. And most of us, or 99% of punters, lose because they're not gambling based on analytics, or they're not doing horse racing betting or strategic sports betting.
Spot on.
Guided by professionals, or, using system-based analytics. And that's why 99% of people lose. And I feel like you can apply it straight to crypto.
I reckon my mindset was on the exact same notion, where it's one of those things that if you're new to the market, you're probably going to use altcoins as a gambling method, because you're going to think or get sold the dream or read things on X that you don't really understand.
Yeah.
And if you're not building that right backing from the get-go, which would be a holding of Bitcoin and Ethereum majority, then yes, you're going to fall into the traps, you're going to fall into the hype, you're not going to understand how to play it properly. But perfect example on the betting side, if you really understand the market that is there, well, you can take advantage of promotions, you can take advantage of good data, you can actually turn it into a great investment. So I like exactly where you're going. I think to bring a point from the other side, though, and something that you'll definitely, I think your name in the Discord, altcoin dicks for a long time, there is a lot of money to be made in the altcoins when you do know what you're doing. So yeah, maybe talk us through a little bit more on that side.
Yeah, so I think that once again comes back to the investor understanding of the market, both cyclically and how it moves, right? Like we're in a very Bitcoin dominated market and cycle for the most part. So, straight off the bat, Bitcoin should be your largest holding and what guides your portfolio. But yeah, there's pockets of outperformance in altcoins. And if you have a more understanding where we are in the cycle, where we are with ETH dominance, where we are with Bitcoin dominance, where we are with macro liquidity, there's the pockets of the market that we can explain, like, March 2024 or February, March 2024, when altcoins exploded, December 2024, we're talking about when Solana was at $300, Hyperliquid went to $50, $60. These coins far outperform Bitcoin. So if you're able to expose yourself at the right times to the right coins, you're going to be making a lot more money than just simply investing in Bitcoin.
I think like a really big one, and this was prominent at the Australian Crypto Convention.
Yeah.
So had a lot of people coming up to us. Obviously, market was a little bit more shaky than it had been at previous conventions.
Yeah.
And a big point was, well, it is absolutely awesome to hold Bitcoin, and that is our end goal, right? We want to build as much Bitcoin as we can. But in the past year, 2025, mostly the whole of 2025, Bitcoin was down 6%. Okay. And that's fine for a long-term investor, someone who's going, I don't care, I'm looking at Bitcoin for the next 3, 4, 5 years. But in between that time, we were really successful on quite a few altcoins.
Yeah.
And we're able to roll those profits from Asta, from Hyperliquid, back into Bitcoin and overall make that year a profitable year, not a loss of a year. So that's for me why I like the altcoins. I'm very big on people who are just all in on altcoins. That is gambling to a degree.
100%. Yeah. You have to be a very sophisticated altcoin trader to probably be, particularly over this cycle at least, very profitable or very sustainable, one may say. So yeah, definitely.
Spot on. And I think the big thing is, you need to understand what you're using the altcoins for. Yeah. So you can't blindly hold them just hoping and praying for results. They need to be there to roll out of and don't get emotionally attached.
Yeah, for sure. And I think it also comes down to how advanced you are as a cryptocurrency investor, but more importantly, a trader, which we can differentiate because as we know, there's only so much you can do with Bitcoin, but as we know with our altcoins, it's not just holding and praying, we can utilize them through decentralized finance and yield, lend, borrow. And for the more advanced people, altcoins are just as good, if not better, than Bitcoin to trade on perpetual futures or swing trade because they're more volatile, right? And it doesn't even matter to us traders whether that's up or down. So in bearish periods of altcoins, which they always are, for the most part, to be honest, you can be shorting those or doing delta neutral strategies, even through your holdings that you have, shorting, but holding it on spot, earning yield, et cetera, et cetera. So, yeah.
Spot on. Well, I think we covered that pretty well. Yeah. We might just conclude there. I would say that the main point that we're getting across there is that Bitcoin needs to be the majority. Bitcoin needs to be the end goal. Yeah. But of course, if you have the right strategy, if you have the right alpha, if you have the right research, entries and exits, then you can absolutely capitalize on the altcoin market. But timing is going to be a lot more important, right?
100%. Yeah. Fully agree with that.
You can't just hold some altcoins. Examples from previous markets. We could say like Atom, Dot, things like that.
Yeah. All the kind of big guys from those. If you're left back holding those from 2021 peaks to now, you're down over 95%. And these were the ones you mentioned. Polkadot was the coin of last cycle. It ran from 0 to 53, 55 USD. I mean, it's at 2 USD right now. So yeah, can't get left holding the bag. You need to have a strategy in place. You need to have guidance or just your own thorough understanding. And you can get away with, speculating on altcoins. But as Will said, most importantly, having Bitcoin, Ethereum, those larger high conviction ones as majority of the portfolio.
Like it. And before we go on the next point, I just want to say, I think get used to the volatility of Bitcoin first as well. Yeah. There's plenty of volatility in that compared to other assets in the world.
100%.
So get used to that. Get used to the market cycles, if their market cycles still exist. I know it's a new turning point, that one. Yeah. But yeah, get used to the crypto market before you go too heavy on the altcoins.
For sure.
Now on to the next point. A lot of people don't do this, and it's actually a little bit scary, but we'll say the statement is that if it's not your keys, then it's not your coins. So what instantly comes to your mind? Do you fully believe in that statement?
I will say off the bat, yeah, I fully believe in that statement. We can run through the most significant black swan events that have ever occurred in cryptocurrency history, and more often than not, they're just they're associated with centralized exchanges going under. The two most infamous ones that you'll see in the news as long as you're in crypto is Mt. Gox, which was the OG hacking back in the day, which is, a large amount of the supply that majority of people lost. And then the more infamous one is FTX in late 2022 that really saw us put in that bear market bottom. And obviously Sam Bankman-Fried and that whole kind of shenanigan rose up. But yeah, it's as simple as that. These were at the time, two of the most powerful, largest centralized exchanges on earth. And the assumption is with signing up to an exchange and holding all your coins on that is, oh, well, this exchange will never go under. You never really know. I think that's the thing with crypto. If you've been here long enough, there's no such thing as, a centralized exchange that is safe. Of course, we do believe majority of them are, and 99.9% are. But if you're caught in that 0.1%, then you're open to losing all of your Bitcoin, all of your crypto, unless you self-custody it under your own keys, whether that's in a very stable hot wallet like MetaMask or Rabby or Exodus, or your own cold wallet like Trezor and Ledger, and keeping it offline so you're immune to ever losing it. So yeah, I think this is a bit different to the prior question where I could see both sides of it, but yeah, for this one, it's plain and simple. If you don't want to lose your crypto, put it in your own custody.
I'm a little bit on the other side, because I say that, yes, like the statement itself, if you don't have the keys, then okay, you don't legally own it. You don't have ownership of it. But there is also a very high level of responsibility
for sure
when you do start to own the keys, and you do need to keep that safe. So if I have a client come to us and they're 65 years old, straight off the bat, I'm not very tech savvy, I'm not going to be saying to them, yeah, go and set up a Trezor wallet, go and store your keys, these digits that are very long.
Yeah.
So like the crypto bro in me goes, of course, go that side. And that's where we want to push people towards.
Yeah.
But there's absolutely a particular individual and a big part of the market that are probably not suited to having that level of responsibility.
Yeah, no, you're definitely right. I probably did go a bit too hard. And that is very true. One thing I would say is that if you're willing to be a participant in crypto and what it is, I think at the bare minimum, you can learn what a wallet is and how to self-custody. I think that's honestly probably the first thing a person should be taught, because after all, we're in cryptocurrency for our own self-custody, for our own privacy, for our own decentralized version of money. We are in it because we don't like the idea of banks having control of our own money. We don't like the idea of someone else being in control of where that goes, how much we can withdraw, how much we can send, how much I can get out of an ATM. With Bitcoin, that's all in your power. And the first pit stop should be having it under your own custody. But I will definitely agree with you. If you've got grandma who's 82 that wants to get, exposure to crypto, holding it on an exchange is better. Where I would even go a step further now in this iteration of this market with the regulations and the institutional involvement we've now had is just get them to get involved with an ETF. And the reason I say that is it's probably the most strongest form of external custody you can get, because let's just use BlackRock as your example, right? Like it's all under their responsibility, that's regulated. So if your actual Bitcoin did go missing, as opposed to a centralized exchange that might have terms and conditions that they don't require to pay you back, they probably will in litigation senses like it happened with FTX, but as we know, that was on the dollar versus where it was now. But with someone like BlackRock that does it through Coinbase Prime, that is regulated by the SEC, all the regulation bodies, then you're pretty safe there. And you can have it custodied by someone else and you don't have to worry about it.
Yeah, spot on. No, I really like that point as well. Like if you are sitting there, the traditional stockbroking type industry, you're used to buying, stocks, but you're not really sure about crypto, going into the ETF is probably the best shout rather than buying it on exchange or so.
Yeah, and I'll even say there, and it matches the marginal investor that is trying to hold it, right? Like I feel like if you're someone that's so into self-custody and stuff, you're really into that kind of crypto punk type of deal. Whereas you probably, if you want to just get the ETF, you're just speculating and you just want exposure to something that's going up. So you don't really care too much about the deeper stuff with Bitcoin, and you're probably just better off just getting, speculating and exposure via an ETF, and then you don't have to worry about all the
I want to circle back to the original point though, because yes, as I highlight, there is a certain person that I don't think is suitable for the self-custody. However, a story from my point of view, when I first got into crypto, I'm not going to lie, I got into it for profit. I didn't get into it because of the great points that you mentioned that, it's decentralized, you have full control over your funds. So when I first got into it, it was about making the profit, and that's what we were kind of portraying to clients. But now a massive part of it is that side of it that how much do you trust governments today? How much do you trust that maybe in next 10 years time, there's not going to be restrictions on the money that you have? And that is where we want to push people towards. And you have to be comfortable with that self-custody to get there.
Yeah, well, I think, and I'm not going to speak personally for you, but I can say for a lot of people, I think, and it would make logical sense with the timeline that you're talking about, like, you probably first got into crypto, 2016, 2017. And I think the major turning point, not just in terms of money and the control of it, the supply of it, and the tokenomics of, the USD, the AUD, but really COVID was the turning point, wasn't it?
Yeah.
Where, 80% of the money supply was printed within 2 years or something ridiculous like that. Trillions in stimulus. We, as the consumer, bore all the brunt of then the hyperinflation. In Australia, with many different banks, we have withdrawal caps. I think, with Westpac and a few other banks, you can't get more than $1,000. And it's all the result of COVID and monetary and fiscal policy and, government regulations and whatnot. So I think that's probably been the turning point for a lot of people, particularly for me. I was very similar when you first introduced me to Bitcoin way back then. It was just, Bitcoin's $5,000 per coin. Imagine if it goes to 20,000 and we make 15 grand. And now it's getting a bit more serious than that. It's, do we really trust our government? Do we really trust, these people that we pay almost close to 50% in tax in? To keep our money, non-hyperinflating. I think in Australia in particular, interest rates are so high right now, but we're still suffering from inflation.
Yeah, spot on. I think as well, an interesting point before we conclude this topic is there isn't really an asset out there that all governments compete over.
Yeah.
There is gold and there's things like that, but we could talk for hours about the downside of verifying is how much gold is in the US safes and all this type of stuff. Bitcoin is fully verified. There's a lot of advantages of it, but that's something that I like. That both the governments are all competing against it.
Yeah.
It's fully decentralized. You have full control over it. So there is that bigger end goal, let's say. But tying back on the point of not your keys, not your coins, I think I'm going to err towards the side that that's true.
Yeah.
But, definitely understand the responsibility that comes with it.
Yeah, I think it's just kind of one of those ones that if you're looking plain and simple as the sentence, well, yes, logically, if it's not your keys, then it really is not your crypto. You're not in control of it. You're not in possession of it. It's in possession of someone else. So therefore, the statement is true. But yes, we can thoroughly understand why certain cohorts of investors are much better suited to having someone else custody it for the several reasons we mentioned. So
spot on.
Just quickly, if you're ready to take your results to the next level, my team at Imperial Wealth Crypto can help. Inside our Crypto Academy, you'll get access to my personal portfolio, strategies, real-time market insights, and the exact plays my team and I use to stay ahead. With our team of analysts monitoring the markets 24/7, we've helped investors catch moves like a coin that's done a 5x in 4 days. If you're serious about accelerating your wealth, click the link below to book in a call with my team of experts and see how we can help. Now, back to the episode.
We'll get on to the third point. 90% of people should never touch leverage. I think you'll have a few points of interest on this one. I'll hand to you straight away. Go for it.
yes, I think it's similar to the first question, and I'll even raise you one up. I'll say 99.9% of traders just off the bat should not touch leverage. And yeah, really, it's a pretty similar answer for me to question one, and that is that most people, or 99% of people that do touch leverage, do not have the psychological and emotional understanding of what it takes to withstand the volatility in the cryptocurrency market. They don't have an understanding of on-chain analytics, order flow, how the market day-to-day chops and works. They don't have a thorough understanding of technical analysis, fundamental analysis, whatever the type of analysis it is that you prefer to apply to this style of trading. And most of it use it to hyper gamble. I mean, if you said, it's like, and we'll go back to the sports bet and the kind of the betting point, right? Like imagine if you were able to open a sports bet account and you could deposit $5 in there and leverage up 50x to 250, and you could like kind of, you know what I mean? It's just like ridiculous to think about, right? And that's essentially what's happening in the crypto market is that you get a lot of these retail speculators that have no financial background. They don't understand economics. They don't understand trading, derivatives, perpetual futures. They probably don't even know what a stop loss is, right? So they're trading to liquidation. They're putting $100 in. They're getting 100x leverage on Bitcoin. That's a $10,000 position, right? They've probably never held $10,000 in their life.
Yeah, I think the key thing here is severely underestimating.
Yeah.
Severely underestimating. At the end of the day, as a leverage trader, you're really competing, right?
Yeah.
And who in their right mind would go onto an AFL football field, who in their right mind would go into whatever scenario that's highly competitive and think that they can outcompete those people without much training or understanding.
It's a perfect point you make. And it's actually in my advanced trading course for leverage trading, perpetual futures, I make the same point, but it's kind of the opposite. And I tell my students, you're not going to be a good trader and you're not going to be good on leverage in the first month or 6 months or 12 months. This is a long process. You know, Roger Federer, if you picked up a tennis racket and you thought you'd be good in a month and be able to beat Roger Federer, you're dreaming. But if you practiced for 5 to 8 hours a day for 5 years, you might be pretty good.
Yeah,
right?
yeah.
If you, with the footy, if you've never kicked an AFL football before, it's a pretty tough thing to do.
Yeah.
If you log into Bybit and you deposit money, trust me, you will lose that money because leverage trading is a very hard thing to do. You're competing not only against other traders like myself or other people that know what they're doing, you're competing against exchanges, you're competing against market makers, you're competing against whales, institutions, big players that actually have a thorough understanding of this. And that's like going up against the Roger Federer. And Wintermute is your Roger Federer.
They've got a bit of an advantage as well.
Yeah.
You know, they can move markets to a degree. They have information before you.
And as we kind of say, you know, day to day, people don't realize that Bitcoin is just a barometer of liquidity. It just moves in pockets to where that liquidity sits, controlled by market makers, controlled by big players. If you don't know how to trade like them, against them, and with them, you'll be liquidated and you'll lose all your money. And, you know, for the people out there that are crypto enthusiasts, you know, you wake up every day and you see the notifications that I see. It's $300 million has been wiped from the cryptocurrency market today. And all that is leverage traders getting liquidated on a 1% to 2% Bitcoin move because they're just hyper gambling, they're hyper speculating. So
that's it. And look, I mean, the statement itself is 90% of people shouldn't touch it.
Yeah.
I'm actually going to say potentially that's not right because it's not that you shouldn't touch it. It's that you should have the right mindset going into it.
Yeah.
So yes, that would probably put 90% of people, if not 99% of people in the basket that shouldn't touch it. But really, when you know what you're doing, you can make good money out of it. Maybe talk us through a bit of your journey, Mitch, of when you started, how long it took you to get through and how what it actually takes.
Yeah, so I think, you know, people go into it just wanting to hyper speculate on the long side because as human beings, we want to just long everything to the gills and be right when that does a 10x and whatnot. But really the journey of learning perpetual futures was understanding not only risk management and psychology were the two most important parts, but how you can utilize it in a market to actually enhance other areas of your investing. So, you know, a big thing I teach my students is actually the short side of it. And mentioned this before, but being able to hedge, we all hold spot, we all hold Bitcoin, we all hold Ethereum, we might have miners, might have a few altcoins. And as you know, as a watcher, you know that the market for the most part, particularly on altcoins, is bearish for the most part of the years, but we get those very small pockets that we spoke of before in outperformance. So a lot of this time you can be hedging short, you can be employing delta neutral strategies, and you'll be utilizing leverage in a way that actually makes you earn year round, as opposed to just sitting on your Bitcoin that went down 6% last year. Oh, why did I hold this? And I'm down 6% for the year. Well, you could have actually been trading Bitcoin and the noise in between. And it's actually what I learnt was not trying to get so in and out of spot holdings and trying to time the market on that, but you're able to utilize leverage trading and perpetual futures to be able to utilize stop losses, take profits, and actually trade the noise throughout the year on that, as opposed to meddling with your spot. Yeah. I found that was the easiest way for me to manage the market and actually be able to earn more money to then reinvest into spot, to reinvest into miners, to utilize in DeFi to earn more yield. So as Will said, you know, 90% of people should touch it.
Yeah.
But only if they have that thorough understanding, only if they've had a trading mentor, only if they've learned analysis, on-chain analytics, risk management, psychology. And once you have, it's one of the great tools.
Yes, yes.
So, yeah.
I think there's two things that you mentioned in that, and I'll say both of them because otherwise I'll forget. But the first one was hedging. I want to tap on that quickly. And then the second point was long-term sustainability. So the hedging side of things, I think that's something that almost majority, if not all crypto investors don't understand and don't do. No. And it's really as simple, you know, if we can use an example, say Bitcoin sitting 100,000 and you're holding one Bitcoin. If you're not sure if it's going to go up or down from there, you can use leverage to create a short position. If it does go down and it hits your stop loss, say, you know, it goes up and it hits 105K, well, no worries. Your spot holding has gone up and you've copped a little loss on the short. So adding that to your basket of tools can make you way more. And that's the second point that I go into, sustainable. But your approach to leverage trading has to be sustainable. How many people and students of yours come through and they're just desperate to get that trade on? It's not about how many trades you can place. It's how many you can be profitable compared to losses.
Yeah.
And it doesn't matter if that's one trade a month, three trades a month.
Yeah. So most like the cryptocurrency, the easiest way to kind of categorize winning in cryptocurrency isn't actually your win-loss. It's actually your winners just have to be a lot larger than your losses. And in cryptocurrency, it's actually very easy to do, particularly in leverage trading, because you can lose 5 trades in a row. And let's say you're risking 1% per trade. It only takes 1 5% trade to make back the 5 losses, which is a very usual occurrence in cryptocurrency. So, even someone like me, I would actually say that more often than not, I might be a 50-50 trader, but my wins are a lot larger than my losses. And that's what actually makes a profitable trade. And having that emotional and psychological kind of strength to withstand those losses and understand that's just the nature of this market, you can win a lot more money back, particularly on the hedging short side, which I'll just quickly touch on, is that, most people, they hate pressing that red button in crypto. They round trip their spot. If they want to leverage trade, it's just longing to the gills, as I said, and wanting to win big to the upside. But let me tell you, it's hard to press that red button. But
red button, you mean by selling?
By selling and shorting. But, go out there and test it for yourself. The next time that Bitcoin goes to 100,000 to back to that, chuck a head short on with your stop loss, a bit above whatever that major high is. And when the market begins to pull back, which 9 out of 10 times it does, tell me how you feel when you're earning money on the way back down.
Like a bloody genius.
Yeah. And I guarantee you, when you're holding all this Bitcoin, you're holding these meme coins and you're holding X, Y, and Z, and you're losing unrealized profit on the holdings, when you begin to realize that profit's on the shorts and understand that you can be earning money both ways, it really opens your eyes up to the market. So
yeah, and gives you more capital to then redeploy at those lows back into the spot. So
100%.
I think to conclude that, I'm going to say 90% of people should never touch leverage, but I'm going to put a little disclosure at the end of that, unless they have the right education, right mindset, and right approach and mentorship in the market.
Yeah,
that's the only way I see it working.
Yeah,
unless you're willing to lose for 3 years and go a bit stir crazy. But
which most are apparently. So.
Yeah, I can imagine.
Yeah.
All right, so let's move on to the 4th point. We may need to get the boxing gloves out for this one, Mitchell. This one might end physical, but mining isn't worth it. You're better off just DCAing into Bitcoin. Look, I think there's definitely pros and cons to both sides. So I'll hand it over to you first. What's your opinion on that as a true or false statement?
Yeah, so straight off the bat, as we've said, I'm a non-miner for the most part. I think it's a really easy way to categorize this question. If you're someone that doesn't really want to follow the market, you don't really understand what a bear and bull market is, don't understand liquidity cycles, Bitcoin halvings, more and more, whatever it is, you're better off becoming a miner, because it's a self-passive way of dollar cost averaging into the market. You're getting Bitcoin at every possible price there is on a daily, every single block, so on and so forth. Therefore it's the easiest passive dollar cost averaging strategy without you having to worry, and you'll have Bitcoin all year round. However, it is nowhere near as profitable or efficient as investing or dollar cost averaging into Bitcoin if you understand those type of things. The reason for that is because if you can somewhat time the market, and I want to be careful in saying that, as no one can time the market perfectly, then you're able to pick up Bitcoin or altcoins, whatever. Obviously, we're talking mining here, so for the most part, Bitcoin is what we're talking about, but obviously you can mine Doge and other coins. But you're able to, for instance, pick up Bitcoin when you know it's at deep discounts in a period of time, such as the end of 2022, when it was 16, 17, 22, 25, whatever, and understand as an investor that if you do understand the timing of that, you're getting it very cheap, and you would be sitting on a 5 to 6x right now, right? There's no one that would be sitting on a 5 to 6x that bought a miner in 2022. That's the truth. But the thing is many uneducated investors that could have bought a miner and passively dollar cost average were buying Bitcoin at us when it was back in the media, so on and so forth, and they could have just been passively mining it the whole way through. So I think that's the easiest way for me to say it. If you're uneducated, you don't like the volatility, you don't want to look at prices, you just want to get Bitcoin year round, sure, go for mining. If you want to get involved in the market, you do have a general sense of how markets move. And this doesn't just apply to Bitcoin. You can say it's any financial market, but they move in peaks and troughs. That's how financial markets have always worked. And you're far better off buying it than mining it, because you don't have overhead costs such as
power bills,
electricity, custodying it, and constantly, having to pay bills and whatnot. So that's the way I see it.
I think a big thing that we've seen, and I've been in the crypto game for 10 years
Yeah.
now, and I don't think anyone would disagree with this, that so many people enter in at the height of the market. That is usually where people, and I reckon every single person watching this right now will put their hand up and say, yep, whether it was the 2017, that's when I entered and absolutely watched a lot of my portfolio erode after thinking I was a millionaire, I was the best in the world or whatever it is.
Yeah.
And unfortunately, that statement's true. Now, what mining does is it forces you to be in the market for 4 to 5 years.
Yeah.
And that has proven to be time and time again, the amount of time that if you are in the crypto market, you're almost always, and mathematically you are always, in the profit.
Yeah.
And so that's my biggest thing with the Bitcoin mining for beginners. I think it's a great entry into the market, which takes away the psychology game. It doesn't have you having to have much understanding of where to buy and where to sell, just a pure dollar cost average. So that's the big thing for me on the mining side. Other great points as well, there are tax benefits as well. So you do mention you have costs, you've got to buy the hardware. You do also have to pay your power bills, but those can be tax deductible. During COVID, it was one of the best plays personally on the business. We were able to buy, I'm just going to put the number there, $100,000 worth of Bitcoin miners. There was instant asset write-off. I was instantly able to write those miners off, reduce my taxable bill at the end of the year, and then increase my exposure to Bitcoin. So I love the strategy side of it, but absolutely I will agree to what you say. If you are willing, if you are able to watch the market and have a basic understanding of where support levels are, where resistance is, and build your own entries, of course you're going to be able to outperform something that's just buying every single day. But you need to have the time commitment. You need to have that level of psychology. So to be honest, and this is why Mining Store and Imperial Wealth coexist together as brother-sister companies, doing both is where I've seen the best results.
Yeah, I was going to say, I was literally, before you went on to that last point, I was going to butt in and say, to be honest, to anyone listening, is our best clients, our most successful clients do both. Like our best clients have lots of miners and they also actively buy Bitcoin at the right times. Bobby, John, like a few of those others out there, these guys have had miners spinning for years. And I saw Bobby DC, like he literally messaged in the first message he sent in 2 months the other day into our Crypto Academy chat saying, just dollar cost averaged at 82,000 Bitcoin. Can't believe how cheap it is, right? And he's already up 20% on that move alone. So if you have a thorough understanding of even, the pockets of when it's at a discount, you can be doing both. He's got miners spinning the whole time. You can have even different cute strategies. Like I know like a lot of, I say cute because, I know some of our clients buy Bitcoin for themselves. They have their miners spinning for their kids. So you can have different ways of looking at it. A mix of both is the point I was saying.
Spot on. And timing. There's times where, as someone who's been in crypto for 10 years, there are times when I go, you know what, I'd rather buy 100 grand worth of Bitcoin miners right now. Or there's times that I go, Bitcoin's cheap as chips. I'm not going to buy 100 grand worth of miners. It's going to take me 5 years. To accumulate the whole amount, I'll just buy Bitcoin at this price. So as I say, absolutely mix of both, particularly when things are at higher levels and I don't want to buy into the top of the market, I'll put extra capital into the Bitcoin miners and let it DCA me over. So I think we've covered that one relatively well. The statement being mining isn't worth it. You're better off DCAing. I'm probably going to say that's false and it is worth it. But you just, a bit of both is probably the best way to go about it.
Yeah, I just honestly say individualize it to the type of investor you are. Understand, do I want to be heavily involved in the highs and lows of a market? Do I have the emotional and psychological psyche? Or do I just want a passive investment where I can have my miner put online somewhere for me? I just have to check in, once a week, once every few months to collect my Bitcoin, and that's that. So
spot on. The next point: regulation doesn't kill crypto; it pumps it. What are your thoughts?
Off the bat, immediately, this question can go one of two ways, and I think it's to do with the maturity of the asset class itself. I would say we've been here for almost 10 years now, it feels, and felt like back in the day, any whisper of regulation would crush the market because
the old crypto bro days.
Well, it's just like a cyberpunk type thing, right? Back in the day, we wanted to get into crypto. Obviously we wanted to speculate first and foremost, but I think most people got into crypto because they really believed in what it was. It was reading the Bitcoin white paper for the first time was, hang on, we can have our own decentralized version of money that the government can't regulate, that the government can't touch, that the banks can't regulate, that the banks can't meddle with. And I don't think we can say that too much these days, with the introduction of, regulations first and foremost, but allowing things like ETFs to streamline institutional involvement, so on and so forth, has pumped the market largely. And that's because of things like inflows. We've had over $100 billion. I think BlackRock alone has over $50 billion of money invested and custodying in Bitcoin themselves through Coinbase. So arguably, could you say we could have gone from, the ETFs got introduced at 38,000 Bitcoin USD from memory, and we're at 95,000, let's call it, with a high of 126,000. I think you can safely argue that we probably wouldn't have reached that peak without regulation, without the introduction of these entities being able to speculate themselves on Bitcoin. So old days, cyberpunk days, bad. These days, I think it's what we need.
Yeah.
I think it's a reality that most cyberpunks and those that believed in the fully decentralized, non-regulated version at once. But, once again, it opens a large can of worms for the listeners out there that are noticing coins like Monero and Zcash are all pumping pretty hard right now, is because of that kind of narrative of the, have we lost Bitcoin to the suits, to Wall Street, to the US government that wants a strategic Bitcoin reserve? Is this really what we wanted Bitcoin to be? Or are the privacy coins that have zero institutional involvement, that are completely private in nature, that it's not on a distributed public ledger where someone can see where you've sent it, how much their Bitcoin balance is, so on and so forth. So
yeah, I think it's really well summarized.
Yeah.
I think when you say, does it kill crypto? Okay, elements of the crypto market, the degen market, yes, it probably has suppressed it, and maybe people are blaming that we didn't have an altcoin season last year because all money and attention's just in those ETF. The ETF is the only place money's going, and that's the only place volume's going, right?
Yeah.
So in a sense, yes, it does crush elements of the crypto market, but it's almost a philosophical question, because what do you see crypto as?
Yeah,
you touched on the decentralized nature and the original white paper. Yes, it probably deters it away. It does make things more centralized, but in terms of making it a sustainable market, something that will integrate more with the whole society and work alongside the centralized system, I think it's absolutely necessary. Institutions can't get involved unless there's clear guidelines.
Yeah, for sure. And it's just the nature of our world, unfortunately. I think you have to be a bit of a grown-up about it if you are on the cyberpunk side, and just admit that, we do want to live in this free world where the government doesn't touch anything and the banks don't regulate this. But unfortunately, that's just not the truth. And it's never going to be the truth. We're always going to have a government. We're always going to have banks. We're always going to have regulations that get pushed forward. And unfortunately, you're going to have to adhere to them. But, even on the other side of that, there is a lot of, unfortunately, in this industry, as there is in every other industry, scams. People do, unfortunately, in this industry fall to a lot of crypto scams, whether that's email phishing links, whether it's Discord impersonators, whether it's, the list can go on and on and on. Unfortunately, if we don't have regulations or safety nets in place for consumers that it might have happened to that are listening, then you're going to lose all your money. You're not going to have, insurance on this kind of stuff. And unfortunately, every kind of industry and financial market requires regulations, requires stability, and we're not immune to that. So unfortunately, it is the way forward if you are one of those cyberpunks, but fortunately for us, I do think over the long run, particularly if we're talking about the US market, such as the crypto market structure bill, which is a very heated topic at the moment, that Coinbase just pushed back on because the banks had too much to say about yield and earning on stable coins and stuff like that. But, once these bills are passed, we've had obviously the Clarity Act to do with stable coins, and we've seen how much stable coins have exploded as a result.
Yep.
I think once these larger structured bills get passed, it's one of those things you can't ascertain how much it pumps or dumps the market. But I think if you're looking 5 years,
it grows.
Yeah,
it keeps it around.
If you're to look in 5 to 10 years' time, you might attribute the fact that 20% of global crypto adoption that's been raised from, I think, what is it, like 8% or 5% or something. You'll attribute that to regulations and the ability for it to expand because of that. So yeah.
Absolutely. Well, I think that concludes. I think that was really good. I enjoyed the debate arena. We might have to get it going again, but those are probably the 5 most controversial or debated topics in the cryptocurrency industry. Hopefully everyone got a little piece of insight from that. Leave your comments below on what you think what are your thoughts of some of these points that we raised? You know, are you agreeing with him? Are you strongly on one side or the other? We'd love to hear it. And until next time, Mitchell, we'll see you next time. Thank you very much.
Thank you.
Thanks for tuning in to Crypto Coach Will. If you got value from today's episode, then make sure to subscribe so you never miss the latest tips to navigate the crypto market. If you're ready to take crypto investing to the next level, check out the links below where you can book in a call with my team of experts. We place strong emphasis on educating before investing in the market, so take advantage of the knowledge they have to share. Don't forget to follow us on socials @CryptoCoachWill, and I'll catch you in the next episode.